So, let me take Warren Buffett, for example. And to be totally frank, I'm not his biggest fan.
What do you think of Elon Musk, though? If you met him, and would you invest in Tesla?
Well, I think you're trying to bait me a little bit.
I'm just asking you. You can say no, and no, or yes,
listen,
yes,
he's done
yes.
some remarkable things.
Okay.
He's done some remarkable things.
Have you met him?
Oh yeah, he joined the Giving Pledge some years ago. I've only met him once or twice, but yeah, I've talked with him, but not for quite a while.
And would you invest in Tesla?
No.
Warren Buffett, a name synonymous with legendary investing, has amassed wealth through meticulous analysis and a keen eye for undervalued companies. But even legends have their blind spots. Welcome to the billion-dollar question of the decade. Did the Oracle of Omaha miss the digital train not once, but twice? From the orchards of Apple to the electric veins of Tesla, we unravel the enigma of Buffett's hesitations in the tech realm. Could this aversion be Buffett's Achilles heel, costing him not millions, but billions? Diving into the financial wave, Tesla's stock performance has been nothing short of a roller coaster ride with electrifying highs. Since its IPO in 2010, Tesla's stock has skyrocketed over 20,000%, catapulting early investors into a realm of unimaginable returns. It's a spectacle of how disruptive innovation can translate into shareholder value. Each milestone Tesla crossed, whether it was the success of Model 3 or the unveiling of futuristic Cybertruck, echoed through the stock market with resounding gains. This narrative of soaring stock prices paints a picture of a missed goldmine for those who hesitated, mirroring the skepticism displayed by the Oracle of Omaha. Yet, amidst the roaring cheers of Tesla's triumphs, it's essential to remember the roller coaster nature of its journey, marked with both steep ascents and sharp descents. This historical performance lays bare the essence of what might have been Buffett's billion-dollar hesitation. As we delve deeper, the scenario unfolds a juxtaposition of traditional value investing and the futuristic allure of Tesla. Is this a mere oversight or a calculated omission by one of the greatest investors of all time? Today, we dissect Buffett's billion-dollar blunder. Some may argue that Tesla is too far from Buffett's area of expertise, as he has avoided many tech stocks for years because he didn't grasp their business models. However, this explanation doesn't hold up for a reason. Warren Buffett has diversified his portfolio with the help of his two investment managers, Todd Combs and Ted Weschler. They have helped him invest in tech stocks such as Activision Blizzard, Snowflake, and Taiwan Semiconductor. Buffett also owns a stake in General Motors, which is ramping up its EV production. However, he has been reducing his stake in BYD, a Chinese EV company, since August 2022. So, what is the real reason Buffett is not buying Tesla? That is the question I will try to answer in this video. Warren Buffett did not invest in Tesla because of some important reasons. One of them is that Tesla is too expensive. Tesla has good numbers, like its PEG ratio and earnings multiple, but they are still higher than some other stocks that Buffett owns. Tesla's future earnings are also hard to predict, which makes it risky. Buffett likes to invest in companies that have clear advantages and plans. He knows that electric cars are good, but he is not sure if Tesla has the best technology. Tesla changes very fast, which can be good or bad. Buffett prefers to invest in companies that have stable and clear future earnings. Buffett is a value investor. He cares a lot about the price of a stock. He does not like Tesla's price. Tesla has a high price-to-earnings ratio of 81.69. Buffett has another stock that is more expensive, Snowflake. But Buffett also cares about how much a company will earn in the future. In his 2013 letter to his shareholders, Buffett said that he and his partner, late Charlie Munger, only buy stocks that are cheap compared to their lowest earnings for the next 5 years. If they cannot guess the earnings well, they do not buy the stock. Buffett showed his opinion on Tesla in the latest meeting with his shareholders. He said, "I think I know where Apple is going to be in 5 or 10 years, but I don't know where the car companies are going to be in 5 or 10 years." This means that he cannot guess what Tesla's earnings will be. That is why he does not want to buy the stock. Buffett adheres to a strict set of criteria when evaluating stocks. He seeks reasonably priced stocks relative to their estimated earnings range and requires a reasonable ability to forecast earnings for at least 5 years. Tesla doesn't meet these criteria, failing what's known as the Buffett Test. Additionally, Buffett places substantial emphasis on a company's management team. Elon Musk's unconventional leadership style, marked by visionary but occasionally impulsive actions and public controversies, might not align with Buffett's preference for stable and predictable leadership. In 2018, Musk tweeted that he had funding secured to take Tesla private at $420 per share, causing Tesla investors to lose $12 billion. He was sued by shareholders and found not liable. This difference in leadership style could be a factor influencing Buffett's decision regarding Tesla. The sweet spot. Even if Tesla had a good valuation, a strong moat, and a great management team, Buffett might not buy its stock. Buffett has a simple rule for investing. He waits for the perfect opportunity and ignores the rest. He said, "The trick in investing is just to sit there and watch pitch after pitch go by and wait for the one right in your sweet spot. And if people are yelling, 'Swing, you bum!' ignore them." This means that Buffett only buys the stocks that suit his strategy the best. Tesla may not be one of those stocks. It may not appeal to Buffett now or ever. What would make Buffett change his mind? Buffett has been known to change his opinion on stocks before. For instance, he said in 2012 that he would not invest in Apple. Now, it is the largest holding in Berkshire's portfolio. What could make Buffett reconsider Tesla? I think the case of Apple is a good example. Buffett was not the one who first decided to invest in Apple. He said that it was one of his investment managers, either Todd Combs or Ted Weschler, who made the choice. But soon, Buffett also became a fan of Apple. I can imagine something like that happening with Tesla in the future. When Buffett fully accepted Apple as an investment, the company was the most profitable in a huge market with great potential. The Buffett mindset. To understand Buffett's decision, you need to know his perspective. He thinks of himself as the main person responsible for managing Berkshire's risk. He tries to avoid any move that could expose the company to too much uncertainty. That's why he sometimes skips buying stocks that he thinks have great potential. Apple was an example of that. In 2012, Buffett admitted that Apple might be worth a lot more in 10 years, but he didn't buy the stock at that time. It's worth noting that Berkshire Hathaway stock performed much better than Apple did from the time Buffett said that until 2016, when Berkshire started investing in the tech giant, Buffett will only buy Tesla stock when he's happy with its price. This approach has served the 92-year-old investor well so far. But what if Tesla keeps outperforming Buffett's favorite Berkshire Hathaway? Even the Oracle of Omaha might concede that it's possible. Warren Buffett believes that alternatives have a future and will become increasingly important over time. However, he also acknowledges that it is not possible to change the world overnight. The current infrastructure, such as the 260 million vehicles on the road in the United States, cannot be easily replaced or modified. The average age of American vehicles is around 11 to 12 years, indicating that it will take time for significant changes to occur. Buffett emphasizes that the world is moving in the right direction in terms of minimizing carbon emissions. Value investing, at its core, is about unearthing stocks priced lower than they should be, based on assets and earnings potential. Buffett's method involves assessing factors like free cash flow, book value, competitive landscape, and management quality to calculate this true value. Understanding a company's business model and industry is crucial for this assessment. This principle, known as the circle of competence, is simple. Stick to what you know, akin to someone cooking recipes they've mastered. Tesla's realm is a blend of innovation and risk. Venture with us as we delve into Tesla's ambitious ventures like the Solar City integration, aiming to redefine energy consumption, or the development of the Powerwall to store solar energy. Moreover, Tesla's autopilot and full self-driving features are propelling the company to the forefront of autonomous driving technology. And let's not forget the mesmerizing vision of Neuralink, another of Musk's ventures, aiming to blend human cognition with AI. These ventures paint Tesla as a tech company, masked as an automaker. Each venture is a dive into uncharted waters, representing both boundless potential and significant risk. This multifaceted nature of Tesla gives rise to the complex dilemma faced by traditional investors like Buffett. Tesla, on the other hand, is a whirlpool of multiple industries: automotive, energy, self-driving technology, and robotics. It's a pioneer in the electric vehicle market, yet a young player with a short track record, operating in a rapidly changing landscape. The challenges extend to production and quality control, with past vehicle recalls and hurdles in meeting production targets. Buffett's reluctance towards Tesla stems from his inability to fully grasp its business model and the high valuation in the stock market, which he finds difficult to justify as a value buy. Is this caution warranted? Tesla's potential is immense, spearheading electric vehicles, self-driving cars, and humanoid robots. However, its youth and fierce competition pose significant risks, reminiscent of standing at a crossroad with diverging paths laden with gold and thorns. Ultimately, the decision of whether or not to invest in Tesla is a personal one. There are valid arguments to be made on both sides. If you're considering investing in Tesla, it's important to do your own research and make sure that you understand the risks involved. It's like shopping for a car. It boils down to personal choice, thorough research, and understanding what you're signing up for. This narrative reaffirms Buffett's cautious approach towards tech investments, urging viewers to align their investment decisions with personal circumstances and thorough research. As we wind down this voyage of financial deliberation, it's noteworthy to mention that Tesla isn't the lone star in Buffett's galaxy of missed opportunities. Reflecting back, the Oracle of Omaha steered clear of the tech boom of the 90s, a decision that spared him the dot-com bust, but also the soaring gains from the likes of Microsoft and Google. His aversion to tech extended to the early days of Amazon, a retail juggernaut that reshaped the shopping landscape. These instances, like whispers from the past, echo the conservative essence of Buffett's investment mantra. It's a tale of cautious deliberation over exuberant gambles, a hallmark that has both shielded and shackled the investment titan in the face of booming tech innovations. The thread of caution weaves through the narrative of Buffett's investment saga, reflecting a temperament that chooses the trodden path over the risky trails blazed by the likes of Tesla. As we mull over these missed opportunities, the question lingers: is the conservative genius of Buffett a boon or a bane in the face of evolving tech frontier? To discover more financial insights, especially from other financial experts like Warren Buffett, check out the video on your screen. Keep learning with us. Thank you for joining us. Until we meet again, start small, think big, and stay financially enlightened as you build your future.